Please welcome to the stage former SEC Chairman and Sullivan and Cromwell Senior Policy Advisor and of Counsel, J. Clayton, and Pantera Capital founder and managing partner, Dan Morehead, with Bloomberg's Carol Massar.
Well, hello, everybody. We have a great duo here to talk about a lot of things. And I have to say, when I initially planned how I was going to do it, I was going to start with, crypto, because there's been a little bit going on. But I need to ask you, and I know Alex talked about it a little bit in the last session, about the weather and climate, because we're talking about stress in society. And I feel like the ultimate stress is potentially what's happening in our climate. And I feel like I'm seeing people wear masks again, people staying home, kids staying away from school. We're not going out of our offices. I mean, I've seen this movie before. So I am curious. Jay, let me start with you. Two super smart folks. Start with climate as a risk. How do you see it?
Well, it is a risk. And it's a risk that we've known about for some time. I mean, if you talk to property and casualty insurers, they've been modeling climate for years.
Right. Pulling out of California.
Exactly. But thinking about these things, and we can get into why they're pulling out of particular states and not others, which is not just climate risk, but I would say political and legislative risk. But what do today's events show us? This is a global issue. And we are unfortunately right now trying to tackle a lot of global issues with local regulation. Incredibly inefficient, likely ineffective. I mean, this is a Canadian-sourced, event. Right. Not a Canadian-sourced problem, but a Canadian-sourced event. Manifesting itself here. Climate is obviously a global issue. It is not something, I'll just say it, it is not something that can be effectively regulated on a local and indirect level.
How big is it a risk to the investment environment? And then I'm going to bring you in, Dan.
Well,
it already is.
But it's like other global risks. It's one that you have to deal with, right? Any type of geopolitical risk, which I think climate falls more into the space of geopolitical risk as to what we're doing about it. The idea that a business can somehow affect it is fanciful. The idea that a business has to deal with it is real.
Dan, come on in and how you see it.
Yes, the blockchain can be really effective when you have multiple counterparties trying to deal with each other in a central...
You went right for it.
No, I think blockchain can be effective because you need to know the provenance of energy credits, right? There's a huge desire to really cost out the impact of, as Jay said, it's all global, the contribution to energy, or to climate change. And it'd be really amazing to have central credits where you can be trading those, where you know the actual provenance. Is it really a renewable source piece of energy that you're buying instead of just this, huge amount that gets dumped into the grid?
Do you think, though, in terms of the impact, here we are, we looked outside, it's a little bit better today, but are we giving it enough attention to realize we're going to talk about stresses, whether it's in banking, whether it's in crypto, as we saw certainly again another round this week. Are we giving it enough attention in terms of it as a stress point for investors and financial markets?
Oh, I would say not. Yesterday was like a dystopian future, right? Like the Martian sun.
It's not an Apple TV series.
Yeah, no, that was pretty wild. And people are hard with abstract things that are very slow moving, but yesterday was pretty hard to ignore.
Well,
all right.
Well, let me just pick up on what Dan said and look a little forward. If you're going to solve a global problem, you have to have coordination mechanisms. One of them is regulation, but another one of them is information and markets. We are not going to solve, if you believe that carbon reduction is an important part of managing climate risk, if you don't have a carbon transfer market, you have a very inefficient solution.
So you'll never get anywhere.
Well, yeah, it can't, there are a number of industries that cannot continue unless we have an effective carbon transfer market. I don't think anybody takes the other side of that.
I'm spending more time than I thought I would, but so based on some of the divisions that we're seeing right now, and you have US and China, biggest import in terms of the US, the global economy, but also major polluters. And I just wonder if we can't get those two together, can we solve it?
Well, they are together. No, they are together in a very deep economic way. When you have a stark, what I would say is a stark metaphor that Elon Musk uses with co-joined twins. But if you just think about it very analytically, what would the cost of an abrupt separation be economically? It's extreme. So we actually are together in this. One of the questions is, how do we go forward? I look at the last 20 years and that deep integration. We actually shifted dirty energy offshore to China. That's a big part of the integration. Now what do we do about it?
Right. That's not, yeah. Now we have to kind of figure out a better way in a big way. All right. Let's shift to crypto, because I do want to get there. It's a shame we didn't have some news this week. How are we thinking about this? And our David Weston talked with SEC Chair Gary Gensler. He said he was questioning the actual value of crypto tokens. He also said the rules are already clear on cryptocurrencies. Dan, do you agree? I'm assuming no.
I think it's unclear because there wouldn't be these cases that are in courts if it were clear. If it's not yet clear what companies should do.
It's not yet clear what companies should do. Okay. But is it the beginning of the end?
Oh, I actually think it is the beginning of clarity. There have been some big events in our industry, like FTX's failure and alleged crimes last year, a bunch of failures of centralized lending entities, and then the recent cases against exchanges in our space. For better or worse, I think they will bring clarity. And I think that is great because blockchain is here to stay. The Federal Reserve's building a blockchain. China already has a couple 100 million people using a blockchain. It's a very important technology. The U.S. actually has a real national security interest in having blockchain happen in the U.S. versus offshore. So it might not be pretty, but it's probably going to bring some clarity soon.
Jay, how do you see it? Do you agree with Secretary Gensler's moves? If you were SEC chair, would you have taken these moves?
Look, it's his leadership now. He's been in this position for over 2 years. Where they've gone with this, I'm not going to be the person who throws bombs or second guesses from the sidelines. I am a supporter of the agency. I'm a supporter of the law the way it is. I think that when I was there, people would say I was a crypto hawk. We effectively shut down the ICO craze. Said that most of what I'm seeing is securities activity. But I do think we are having very blunt conversations about something that requires nuance. Crypto is really a technology. The use of blockchain technology in all sorts of aspects of our financial system should be not controversial. If you have an asset, pick a CMBS security, represented in tokenized form,
right,
there ought to be a way to custody that, transfer it, because it's probably going to be more efficient than what we're doing today. So there is a crypto use case that is clear, uncontroversial. We ought to be thinking about how to do that. I am remarkably impressed by the functionality of true stablecoins, not the algorithmic stablecoin, not the liquidity transformation stablecoin, but a true backed by the same thing that we back bank accounts by. Okay, let's just put it that way, or backed by the same thing that you would back a repo by. Something like that, a true stablecoin, a remarkable technology at the retail level to be able to transfer dollars around the world. I mean, we use $100 bills in cash for a lot of things. I say we, not the populace, but people outside the United States. Wouldn't a stablecoin be a better way to do that? Wouldn't it be better for KYC? Wouldn't it be better for AML? I think so. I think we ought to be looking at that technology.
I would say the irony is the only time one of the best stablecoins, USDC, broke the buck is when it was announced they were a customer of Silicon Valley Bank. It traded from $1 down to 87 cents. And then when everyone realized it was completely collateralized, all that, it came back up to par. So I agree. Stablecoins are very important.
So what's the way forward, Dan, in terms of, as Secretary Gensler and the SEC obviously pursuing their moves against Coinbase and Binance? I mean, first of all, regulators behind? I mean, where should they have been maybe a few years ago?
Well, an important point, just like climate, blockchain is a global, borderless thing. It exists, and so regulators do need to think about it in a global context, not national, or even in the U.S. There's 8 or so different agencies that have purview. And the thing to remember is most countries are pretty neutral on blockchain, and even most agencies in the U.S., the CFTC, OCC, a lot of agencies have been very progressive, very far ahead of the curve. And so globally speaking, regulation has been fairly neutral, and blockchain is now used by 300 or 400 million people.
So, yeah, let me make a point on the cases. The allegations in the cases, again, in FTX and in Binance, it's reprehensible behavior. Okay? Nobody wants it in our financial system, but it's not on the blockchain. It's commingling, it's fraudulent representations to the extent true or not. It's not as if the technology failed or the technology had some sort of fundamental problem.
So then how do you think of the role of crypto and blockchain? And I know we kind of lump a lot of stuff together, but how do you think about it, Jay, going forward? So it's not going away, and the U.S. is not going to not have a role in it.
What do we know? We know that it's unlikely, blockchain is unlikely to be going away. We do need to update our technology stack in the financial system.
Right.
No one disagrees with that. It's not going away. What's also not going away is rigorous regulation of retail investment products. That's not going away. Those two things have to be reconciled. And that's where we stand today. And they're being reconciled in the courts, being reconciled in other places. But I think the blunt approach that blockchain, crypto is somehow bad is wrong. And the blunt approach that our traditional regulatory framework is somehow completely overbroad is also wrong.
Because some of the reporting that we've done, or in the last week or so, or just this week, is this thinking that as the SEC is widening its pursuit of crypto pretty aggressively, that the U.S. is ultimately turning its back and won't have a role globally. Do you see it that way? Dan, do you see it that way?
Well, I think it is a risk, because if you think about the internet, literally, the government literally built DARPANET, the internet in the U.S., and all of the major internet companies are based in the United States or a Chinese version of them. And so I think as an American citizen, that's great, that it accrues to our country. Blockchain really is the polar opposite, that regulation in the US has been scary enough that 19 out of the top 20 protocols are outside the United States. And at a time last year, 95% of all trading of crypto assets was offshore of the United States. And again, I think there's definitely some bad actors, like Jay said, that really need to be criminally prosecuted. But most people are using crypto for very legitimate, very, very important reasons. And it's better to have it happen in the United States. So I'd love to see that flip where we prioritize.
And we have a few data points recently that support what Dan is saying. Other governments are supporting blockchain-based issuances of sovereign debt. So they're saying, and we all know that at the core of every financial system is the sovereign debt.
Right.
And if you're going to modernize, you're going to modernize your technology stack, starting with sovereign debt, repo, that type of thing, is a very effective way to do it. It's interesting that we're turning away from that when other countries are now turning back toward it.
I do wonder, too, what's interesting in terms of regulatory framework when it comes to new technology. We've all been spending, and a lot of folks here at Invest have talked about AI, the next level, generative, machine learning. How do you think about the SEC needs to think about new technology? Is it a case of new framework for new technology? Or is it a case of new technology has to adjust to old framework? Or is that what tripped us up with crypto, Jay?
I think what tripped us up with crypto was the belief that new technology would bend the regulatory framework, that the new technology in the financial world would do what the new technology did in the taxi cab world, where it broke down arcane regulation. But the point I make on this is the core of taxi cab regulation was passenger safety, or at least it was supposed to be. The Ubers, the Lyfts, they didn't really break down passenger safety. In fact, they went there. They were breaking down something else. I think a lot of what I would say is the early crypto, the ICO, was actually breaking down investor protection, very much so.
Right.
Can't do that.
So I am curious. I know you and I were at an event in Orlando yesterday, and you said to me your phone was ringing off the hook the day before because of the golf get-together between PGA Tour and Live Golf, and then, of course, the crypto news. And Dan, I'm assuming that your phone has been ringing off the hook because of the crypto news as well. What is it that people, is that a fair assumption? What was it that people wanted to know from you about the news this week?
Yeah, I mean, I guess people are trying to parse what is the ultimate intention of these regulatory actions. And I do think Jay's point is very, very important. There was some alleged criminal activity that is totally separate from blockchain itself. And so investors really do want to have more clarity before they're going to commit larger amounts of money to this space.
Did you see a pullback at all this week?
Oh, I think so. I mean, people are...
In your work specifically?
Yeah. Investors that we talk to are all, essentially waiting to see where the dust settles. And there's definitely a lot of uncertainty in the market right now.
Jay, what were the calls for you? What you can share?
No, I think the common theme is what's the end state.
Yeah.
Obviously there's disagreements. There's disagreements around classification. There's disagreements around methods to get there. If we're going to have tokenized trading of things that are securities, which I think many of them are, things that are commodities, and things that are others. Let's just pick one. Tickets. How about Taylor Swift tickets? Okay?
Yeah.
Like a market that's really important.
Yeah.
Market that's really deep.
That's my daughter.
Right? It's as deep as many shows as she wants to play.
Right.
Are we going to regulate the trading of tickets to a Swift concert in the same way that we regulate securities? I don't think so. I'm sorry?
Why not? Somebody asked.
I don't. Let me ask you this: Do you think that for Taylor Swift's immense popularity, we should apply that to the rest of the ticket industry? So if I'm selling tickets to a 50-seat theater and trying to do it, that I've got to go through SEC compliance?
Well, maybe not 50, but 1,000.
Okay, now we're having a real conversation about where you draw those lines. It's an important conversation.
Right.
And what I think Dan will tell you is, I mean, he's much more a proponent, or I shouldn't say much more a proponent, much more understands the power of blockchain technology. There's going to be a lot of things, and maybe it's Swift tickets, maybe it's what do you earn when you play video games? Something bucks.
Oh, what is it?
Yeah.
A few bucks.
Yeah. What are the trading of fungible items that are not securities, not traditionally commodities? What's it going to look like in the future? It's a really good question.
All right, I want to shift a little bit because the clock is going really quick. On lending and banks, regional banks, obviously the other crisis. What was really interesting is that as regional bank stocks sold off, I saw crypto moving up. We all did. How are we supposed to think about, I think initially we thought about the crypto world, Dan, as kind of a disconnect, a way to hedge stuff that's going on in the rest of the market. Although we have seen some correlation as well between regular assets or traditional assets selling off in crypto. We certainly saw that last year. So how are you thinking about it?
Yeah, I think that crisis does kind of harbinger the future. If you think about it, banks are kind of like terribly designed stablecoins. Here, I'll pitch you an idea.
Do you agree, Jay?
I'll pitch you.
Look, banks.
Sorry, I didn't mean to.
No, banks serve an incredibly important function, and they have been the source of liquidity transformation throughout the growth of our economy.
Until private lending.
Well, but what have we seen?
Yeah.
Technology has enabled an evolution in credit creation, and we're in the middle of it. Banks are going to be here 10, 15, 20, 50 years from now. They're going to provide services, but the banking industry's dominance of credit formation, that's a thing of the past.
So let me pitch this as a stablecoin idea. I invest $15 million of capital in my stablecoin project, and then I go sell to the public $190 million of stablecoins. I take the proceeds and I buy $210 million worth of risky assets. I promise the stablecoin people incredible liquidity. With the smartphone, they can get their money back same day, unlimited amount. I also, when asked, isn't 13-to-1 leverage kind of aggressive? I'm honest. I say, hey, if the risky assets go up, I'm keeping all the profits. If they go down, I'm going to stiff the taxpayer. That's what a bank is.
Look, I'll put my bank hat on. I think that's about as stark as you could do it, because that's why we have bank regulation. That's why we have, because we actually need liquidity transformation, in our society.
Do we need more bank regulation? Oh, go ahead, Dan.
Well, I was going to say the stark reality of some of these regional banks is the U.S. government's on both sides of their balance sheet, right? It's all the deposits and it's half their assets. So why is a bank getting paid to intermediate between two sides of the U.S. government?
I think that asset liability mix changes over time, right? I mean, it just happens to be treasuries at the moment for lots of reasons. Look, here's another thing that I would say. Regulation changes slowly. It takes a long time. You have to identify a problem. You have to deal with it, or whether it's too much regulation, too little regulation, changing it takes a lot of time. Be very careful about regulating based on a short event in time. The rapid increase in interest rates that we have had is very unprecedented, following what you and I call a control-alt-delete in the economy,
right,
where we shut the economy down. If you're going to base the fundamental regulation of banks, looking back over the last 24 months, you're likely to get it wrong.
So you're saying we don't need more bank regulation?
I'm saying don't do it with that near-term bias. When you look at it, what's the objective of banking regulation? Safety, right? For the prudential system, but also part of it is credit creation, right? The safest bank is a bank that has to hold 1-to-1. Well, you don't create any credit.
How many people buy Dan's explanation of the banking system? How many are with Jay? More traditional. A lot of people didn't vote there.
Hey, I'm always traditional.
Dan
did wear a tie today.
He did wear.
I come from Wall Street.
You knew that there would be pictures. There would be pictures. I guess what I want to think about, we've only got about 4 minutes here. I mean, the way forward, are we, private lending benefited from the crisis in regional banks, has been? Or, I mean, did you see an uptick?
I think it's just a fairly steady long-term trend for some of the reasons that Dan articulated, is that you have a better asset liability match in private lending. You're on the liability side. It's not a daily liquidity product. People have given you their money for a period of time.
Right.
You lend for a similar period of time with very limited leverage. I think what we've actually seen through some of these, what I'll say is stresses in the system, is that the private credit market facilitates stability during that. You're not selling your assets into those periods of instability.
So Dan, you're thinking the longer term? I don't know. Do we think about a year from now? What's the discussion we're having potentially around blockchain and crypto? I get blockchain more than I get crypto, and I know they go hand in hand, but I kind of get that.
Yeah, I would say I definitely agree with Jay that things take decades. It's going to take a long time. But I think it is the future, that banks really are the past, that the Medici used a very new thing called double entry bookkeeping to create banks. And now we have distributed ledger technology. It's the future. And so that's where we're heading. And, we're going to have these wild, hyperbolic ups and downs. But like a year from now, it'll probably be back on its trend of Bitcoin as a proxy for industry goes up 2.5x a year on average for the last 12 years. So I think we'll keep resuming that trend.
We've lived in a year or a couple of years where I think there are things that just keep happening that we thought never would happen. Pandemic, you were in the administration during the pandemic, complete shutdown. Or you just think about even the last, couple of decades between the tech boom and bust, the financial crisis. What is kind of the black swan event that we should be keeping on our, who would have thought we would have gone through this pandemic? Who would thought we would look outside our windows and it would be like a movie, a terrifying one? So Dan, let me ask you, what's the black swan event that you think, when we talk about stress points, that we should keep on our radar?
Yeah, I used to sit next to Nassim Taleb on the Wall Street trading floor a long time ago. Everybody,
what was that?
It was fun. He's a super bright guy. Everybody ignores black swans till one happens, and then everybody talks about the next shoe to drop. I would say the biggest surprise is we had massive shoes drop last year. It'll just be kind of nothing crazy happening. And if you had to make me say something, I would say regulatory clarity is the one thing nobody's expecting, and there are a few ways that could happen.
And that could be the black swan.
That could be the positive black swan that we're all waiting for the next huge bad shoe to drop. That could be the nice thing.
Nice flip on that. How about Jay?
No, I'm gonna agree with Dan that we have these positive and negative inflection points. We would not have. frankly, I don't think we would have shut down the economy 30 years ago, because we didn't really shut down the economy. We went to a remote economy, went to an economy where we relied extensively on technology and
we were able to, right?
We couldn't have done that. And the cost of the type of shutdown that we did, we would not have been able to bear for as long as we did. I think that's clear, right? Food wouldn't have gotten delivered.
Right.
None of the things that we rely on would have been able to happen. So, we have a lot of what I will say is positive black swan events. I still think the power of technology for productivity globally is underestimated, and it is the reason why so many macroeconomists continue to forecast ineffectively.
I have a million more questions, but we've run out of time, so we've got to run. Jay and Dan, thank you so much. Really appreciate it. Really appreciate it. Thank you, everybody.